Good morning and welcome, Patriot Radio News Hour. I'm Joe Jaquint, CEO of the Patriot Trading Group, and it is Wednesday, Federal Reserve Day. I hope it finds you well out there. As you can probably tell, I have the crud. Yeah, yesterday, just out of nowhere, all of a sudden, I just got some stuff in my throat. It hasn't gone away. I feel fine. Just don't sound the greatest, but bear with us. 800-951-0592. That is the toll-free number. The website at allamericangold.com. And I've got my sidekick, Jason Walker, my partner, is with us right now, and we're waiting, obviously, on Jay Powell. The gold markets are down right now. Now, Kitco's having some technical problems, so you're just going to have to take my word on it. But right now, gold is sitting at that 1830, 1832 level. That used to be the old support that gold couldn't get through. Everyone's going to wait until Jay Powell. We're going to have a really, really, I don't want to say a weird market. It's just going to be an interesting market in that all the big moves in the market are going to come after he talks. Is he dovish? Is he bearish? Is he, whatever he may be? And again, I think Jay Powell is going to be dovish, and you're going to see gold make a big move to the upside. But every time I think that, I always worry it'll be the other way. The one thing before I bring Jason in, I warned you about crude oil. Remember what I said last week? Hey, the direction of crude is going to depend on the oil inventory reports that came out today. And I'll just tell you right now, crude right now is $87.50. If that'll give you a good indication. By the way, Brent crude over $90 a barrel. Crude's up almost $2 a barrel. As once again, it's so funny is I have a headline here: oil rises to $90 on Russia-Ukraine tensions, but then on the gold side of things, gold's down, which it's not the reason, but they said because the Biden administration said, there's no tensions with Russia and the Ukraine, everything's fine. So, Jason, again, the age of misinformation continues, but I think everyone's going to wait to hear what the Federal Reserve is going to do, and I think what they're going to do, Jason, is what we've said all along, is not fight inflation.
Yeah, I think so. I think they're going to try to give as much rosy, happy information about how everything's going to be okay, and that they are slowly proceeding with their plans. And look, everything is okay. Yeah, there's some turbulence in the waters, but everyone's going to be okay. I think that something to that effect. And then they'll continue with the taper, and they'll continue moving towards no longer purchasing as of March. And we'll see how the markets react this afternoon. But it's interesting, Joe, that the chart that I keep mentioning that I've seen, which to me shows that gold is getting ready to break to all new record highs between now and early May. Excuse me. One of the bottom line on the chart is higher lows for gold. So now that gold's down today after it's been creeping up. Let's see if that keeps holding as the higher lows as we keep moving further into 2022. Keeps pushing gold up and up and up. Overall, so I think gold's getting ready to take off, Joe. But by May, and it could be next week, it could be next month, but it's going. That the chart is showing that from August of last year, Joe, to today, gold's slowly going up. The lows are higher lows. Every time gold comes back, it's a higher low. It's pretty enthusiastic for me to look at how this is actually working the way a chart is supposed to perform. And you guys better buy gold. I'm telling Joe, all I know is people better buy gold between now and when this happens. You better start jumping on.
I'm going to say this, and I'll get to it in the next segment. I'm going to give you a great opportunity today. Something I've never done. What I'm going to do this time. So this is going to be something where I've never done this before. But this is going to allow you to buy gold even cheaper. But as the price of gold moves, you'll either get incentivized or punished if you've waited too long. So just be ready for that. But before we get to that, I just want to let you know, for those of you in Colorado, the King Super Strike is over. They have come to an agreement, and Jason, this is just what we've been talking about. Per the union, the contract, by the way, King Super Kroger, for those of you in Arizona, that's Fry's Food and Drug. Kroger and Walmart, the two largest grocers in the country, they've reached an agreement that will secure workers, not all workers, but some workers will be receiving increases of $5 an hour in the agreement with King Super. And again, this is kind of what we talked about with the inflation problem. And now the realities are the lower paying jobs, the jobs that used to pay minimum wage, the job that used to pay $10, $11, $12, though you can't pay that anymore. These jobs are now approaching $20 an hour plus, and the problem is to keep up with inflation. I used to say it had to be $30, probably has to be like $40 an hour. But once again, we'll keep our eyes peeled here. Kimberly Clark had some interesting news, new home sales as well. We'll talk all about that in this special that we've never done before, coming up next. (800-951-0592), Patriot Radio News Hour. Just new home sales, big number, up almost 15%. I was like, wow. I was like, wow. Because I figured it'd be up because, people wanted to, everyone knows rates are going to rise and we're trying to get in before the rate increase. Most of the rise was because they just took the milk before and lowered it by 12%. And I got a funny feeling this number is going to get lowered next go round. But overall on home sales, new home sales in 2021 were actually less, which is kind of shocking to me, less than 2020. By about 40,000 units. Some of that could be not being able to deliver homes. I think a lot of it has to do with price. They're now saying that the median new home price, $377,000, which my guess would put the average price well above 400, because you got some of these guys that'll build those mega mansions that will really kind of drive up those prices. But this was also out today. The average home now costs a new record $475,000. So the average, the average home in America, this is new, used, whatever, however you'd like to call it, is now $475,000. Jason, pretty impressive. Wolf Richter, if you follow him at all, Wolf Street, he had a big article about housing bubble 2.0 and showing the old peaks from the last bubble to the new peaks of this bubble. Far and away now, home prices way above the old bubble, the difference being the banks, if you will, and hedge funds are heavy into home ownership now, Jason.
Exactly, Joe, which makes it, the prices you said for just building a new home being in the $400,000 range makes it for a housing price crash kind of difficult to actually happen. The housing market's there's going to be some wacky stuff happening. And for housing prices to really crash, you'd have to have home builders basically stop making houses. That's the only way it's going to happen. Otherwise, we might see this sideways action, Joe, where the price of everything around us gets more expensive, and how the housing prices don't go up quite as fast as they've been going up, which is really, your house not keeping up with inflation. That's very possible.
It really is going to depend. If they're truly going to fight inflation, we're having another housing crash, period.
Correct. But it could look different, Joe. It could look different. If they
don't fight inflation, in other words, they stick to we're going to raise rates 3 times. It's not going to do anything. Then I think Jason's right. We'll probably go a little more sideways, or at least maybe the pricing of homes slows. Yesterday, Case-Shiller came out and for the 4th straight month in a row, the year-over-year increase fell, but it's still at 18.6% growth year-over-year. And by the way, the Case-Shiller Index has been around, I think, 35 years. And it's the 4th straight decline, but it's the 6th highest reading ever, which just means that all of the last 4 months of declines were also in the top. So it's coming. The pace is slowing barely, still accelerating by all practical accounts at the highest levels in over 35 years. So Jason, yeah, there's a lot. The only way I see it, right, is if the Fed really does fight inflation, then all of a sudden the Wall Streeters who have bought hundreds of thousands, probably by now, 1 million homes, they only did that. You got to understand, well, why did they do that? Oh, housing's such a great investment. And all. No, that's not why they did it. They did it because they're like, I can't buy a bond and make any money. Right? If I wanted to buy a treasury, as an example, just think about a year ago. The 10-year note was yielding like 0.5. Even today, they only could get 1.7%. That's not enough money. Well, they knew, hey, we could buy these homes and, fix them up if they needed to be fixed and rent them. Now, you got to remember, they're big companies, so they're going to subcontract everything out. They're going to have companies that handle all the renting and all and their end game, hey, if they can make 4 or 5%, great. That's better than making, 0.5% on a 10-year note. If all of a sudden the 10-year note all of a sudden gets to 5, 6, 7% because the Fed is actually going to fight inflation, well, then at that point, housing's going to have a problem. Because the banks are like, hey, we don't really want to own these homes. We got to evict people. We've got to fix water heaters. We got to fix the roof, right? We've got to paint. We've got to replace the carpet, right? All of that stuff. And they'll go back to buying treasuries, which they just buy them and have to do nothing. But outside of that, Jason, I think you're right.
Well, and let me add this, because we talked about negative interest rates as being a future plan, which – like I said yesterday, I was talking, Brian and I talked about negative interest rates before the COVID emergency showed up. And we just sort of went away from it because the markets crashed and they came back and all this stuff that's been going on since 2020. With negative interest rates, Joe, you have the ability to try to keep the housing market floating by giving 1% or maybe 2% mortgages so that people can buy more home, right?
That's not going to happen under the dollar. Otherwise, we would have already done it. The negative interest rates we were talking about yesterday, the creation of this digital currency.
Right.
They'll have the ability to take – so look at it this way. In terms of your bank account, right, your checking and savings account, with the digital currency, they can now set those accounts to negative. But have a whole different, hey, we're not saying the treasury market's negative, right? We can set that at a different level. Right now, they can't do that because your checking account and your savings account is tied into the Fed's funds rate in the treasury market. With a digital currency, they can get the best of both worlds, making your bank accounts negative, but still saying, hey, a 10-year note's at 4 or 5%, or a mortgage is at 4 or 5%, which is the only way, really, think about it. That's how you get the banks to agree to stop being banks, right? Hey, yeah, we're on board. Wait, we can actually make money on loans and stuff, and we don't have to worry about negative interest rates and all of those things. It's a very interesting thing about, yes, I want to be clear, and I'm glad you brought it up in case I wasn't clear yesterday. The Fed, for those of you that don't remember, if you missed yesterday's show, the Fed released what I would call, and they do this when they're going to change rules. They do this a lot with the SEC. They did it with, like, take Dodd-Frank, where they put out a report asking for the feedback from the financial institutions. That report came out Monday when it comes to the creation of a digital currency. And already the banks are stepping up. Yes, what a great idea, right? This will allow the dollar to stay the reserve currency and, blah, 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 blah. But in it, what would happen is all the deposits, like where your checks go, you get deposited to, would now be in control of the Fed. And they would handle that stuff totally separate from what the banks are. We talked about, we've got less than 5,000 banks now. I'm throwing out maybe 100 banks will be left, and they'll still do the car loans, the home loans, right? They'll do the credit cards and all that stuff. You just won't have your deposits there. And then the central bank now has a new, call it a new tool, where they can punish you for leaving the money in the bank without necessarily having to punish the banks with lower interest rates. So it's a horrible deal for us.
So the 1.5% mortgage, for example, would have to come with the digital currency. The only question would be then what emergency or how soon could they actually implement this? What emergency could they cook up to force this quicker upon us? Because it's coming. It's just like when, right, Joe? When's it going to happen?
Yeah, that's the big part. And again, whatever story we get today, and again, I'm on the dovish side of the story, but whatever story we get today, just know this: they actually can't do it. They only have two choices. There's only two. I wish there was more. It's either pretend to fight inflation and try to just repeat of the 70s, right? So that's choice one. Hey, we're going to try to keep, the economy growing at 4%. That's what they're hoping for. 4%. We're going to raise rates, but, 3 times, maybe 4 times, maybe, heaven forbid, the Fed funds rate gets to 1%. That's not going to stop inflation. Crude oil, $88. Get ready. Listen. Forget about $100 crude if they don't fight inflation. It's going to be double that. Forget about $4 and $5 gas. It's going to be $7, $8 gas. That's just what's going to happen. King Super, congratulations on your $5 raise. Unfortunately, to actually pay for all the inflation, it needed to be a $10 raise. Or, that's option one. Option two, actually fight inflation, which would have the Fed's fund, at a minimum, the Fed's funds rate would have to be at least 6 or 7% at a very minimum. Which, of course, that's it. Wall Street collapses, the housing market collapses, right? We go through this horrible depression, and they bring on the digital money. That would be my guess. But those are really the only two options. They're going to come out and try to say there's another option. They're liars. Just like when they tried to tell you, it'll be no different than when they said there wasn't going to be any inflation. It's going to be no different than when they said inflation was transitory. This new line that I think they're going to take, which Wall Street will perceive as dovish, is also just another fallacy. But to Jason's point, it'll buy them a little time.
Yeah, that's right, Joe. One of the guys I was watching, he has this analogy of the Fed's choice. Do you remember that hiker that got caught? He fell and he got his arm wedged in between a rock and the cliff, and he was stuck.
And he had to cut his own arm off.
Yeah. So the analogy is this: the guy gets stuck, and he's there for 127 hours. They actually made a movie of this, and that's 5 days. That's over 5 days. He had to make a choice. He needed to chop his arm off and go get and save himself, or he was just going to stay there and probably just die waiting. That is the analogy that this guy was talking with the Fed. If the Fed could chop off the arm and try to save everything, or they could just keep doing what they're doing and eventually the thing will die. That's a pretty good analogy, you have to admit, Joe. It's pretty likely as to what the Fed's choices are.
Yeah, and it's just, again, now we're starting to get some of the, what I'll call the smartest economic people in the room who should have been warning everybody years ago. And I'm sure they've written enough to say, well, I did, but, they've been cheerleading the Fed all along. We talked about Jeremy Grantham as one of them, and Siegel now warning everybody. And again, there was only a certain amount of cheap oil and cheap nickel and cheap copper and cheap corn and cheap soybeans and cheap this and cheap that. That era is gone. It's absolutely gone. And again, they have two terrible choices ahead of them. And unfortunately, both of those choices are not good for the consumer.
We are back here on the Patriot Radio News Hour.
Hey, I'm here. Sorry, Jason.
That's all right. That's all right.
I was talking into the mic. I just didn't have the mic turned on. 800-951-0592.
Good thing you weren't doing the show by yourself today. That might have went on for a little longer. Oh, boy.
I'd have been screaming and yelling for 5 minutes and nobody would hear. Sometimes I feel like that's happening even when my mic is on. But I'm actually thoroughly confused right now. This morning there was a headline out on the BBC saying that the Pentagon was kind of backtracking on talks of a Russian invasion. And that there was talk that they were going to punish Vladimir Putin personally by cutting him off, right? Because they cut Russia off from like the SWIFT system and all that. None of that works. And the BBC was kind of poking fun at the Biden administration. One, again, the ass clown administration that is the Biden presidency. Saying, okay, well, officially, Vladimir Putin owns an apartment, not an apartment building, an apartment and 3 cars. So they're like, what do you mean sanctioning him personally? They've done this to other people, but they've actually had accounts in their name and stuff like Vladimir Putin. He's not that dumb. Of course, we know the guy's got billions of dollars. He just doesn't have anything in his name. But I'm like, okay, I thought maybe the Biden administration, they're just going to backtrack this invasion talk. This now just breaking. U.S. citizens have been told to depart Ukraine by any means possible. This is an alert from the U.S. Embassy in Ukraine telling all American citizens, which they've been urging them to leave, now to leave by any means necessary, Jason. If there is, and I don't know where this is going, but if there really is an invasion, if you will, by Russia into Ukraine, that just makes all bets are off.
All the news around this is fake, Joe. It's so. I actually been looking at this, and it's been going on for almost a decade. Especially the last 7 years. All that's going on is there are on the eastern border of Ukraine. There's a bunch of communities that want Russia there, and they want them there. So 7 years ago they were talking about this, and Putin didn't want to go in there. Putin didn't like the Ukrainian government because they're corrupt, and he also didn't like going in there mostly because economically it would just be bad for Russia. However, if you got Russian citizens that want to be a part of Russia and people are yelling and screaming about it enough, they're going to want Russia to move in and take over those areas. So all you hear on the news, Joe, is, well, what does Russia want? And what's America going to do? And what's Russia going to do? And what's America going to do? Well, what about what the Ukrainians want? right? And we know that Biden has business interests in that country. His son became very wealthy with some business dealings, and that's kind of the game with politicians. There are benefits to being in positions of power. So why do I get the feeling this has a lot to do with Biden's positions and his family's positions in Ukraine more than America wants to try to liberate a country that doesn't need to be liberated? Just let Ukraine and Russia handle their own affairs. But Joe, I mean, we don't make the decisions. Why do I feel like they're going to blow this up into something? And boy, what a timely event of having a near World War III event when the markets are going to get ready to crash, right?
Well, I got to tell you right now, I just don't understand the escalation here on our side. You think oil's expensive at $88? I mean, this would be we would probably be talking about a scenario where oil was up lock limit for several days. We would probably see. You think European natural gas prices were high? I mean, double them? I mean, you would probably have most of the manufacturers in Europe saying, hey, we're just not going to work today because it's too expensive to even turn the machines on.
And their banking system
I just don't get it. It just makes no sense.
The European banking system
like a lot of things make no sense. Right? All these truckers got to have vaccinations cross-border. It's going to make everything twice as expensive.
Exactly.
Kimberly Clark today. I will say this. Thank the Lord for Microsoft. Because Microsoft had earnings today and they made a ton of money. But outside of Microsoft and Apple and Amazon, ain't anybody making a ton of money. Kimberly Clark today said it's just getting worse. They missed earnings. Expenses shot way up. They said that they can't raise prices fast enough, Jason, and this is that gallon of milk thing we've been talking about.
Exactly, Joe. And as you were talking about Europe, the euro is experiencing much more stress than the dollar is. I think their banking system is in much more disrepair than ours is. And Joe, just on top of that, you talked about natural gas. Did you hear what's happening in Turkey here pretty soon? They have their industrial area of their country. They actually have got areas for their industrial, for all their factories and manufacturing and everything. Well, Iran, 27% of their electricity is natural gas. And Iran has a large percentage of the natural gas they use that gets imported into Turkey. So guess what Turkey's going to do? Because Iran's, well, that's not showing up anymore. That's gone. So guess what Turkey's government, their decision is to try to rebalance the shortages. They're going to shut off the electricity for 4 days for the entire industrial section of the country. And the colder weather's coming in, and the residents which use a lot of it for cooking and heating, they're going to be using twice as much because they're getting a massive cold snap of weather. These things are going to have massive consequences worldwide, Joe.
Yeah, and it just doesn't end. All of these things. There's a major blackout this morning in the stands. Kazakhstan, Uzbekistan, and again, this is a part of the world that they produce a lot of energy, not a lot, but enough to make a difference, right? Between them, over 1 million barrels of crude oil not working. I mean, and when I mean they lost power. Like, they don't have any power going on right now. And somebody was blaming it on the crypto miners because China kicked them all out. They went over there. Who knows? All of this stuff in itself, it just doesn't matter. Any little thing now that used to be insignificant is no longer insignificant, and that's what happens when you produce way more money than the earth can provide for. When we get back, a one-of-a-kind special that I'm going to try my best to pull off for everybody. We'll be right back. $800-951-0592, Patriot Radio News Hour. So the last couple of days, we've been running $20 gold on sale at $2,100. Yesterday, as I was getting off the air, gold was $2,150. Right now, gold's sitting at this support. Like Jason keeps talking about these higher highs and higher lows. It's sitting at this higher, what would be a new higher low support at 1832. Let's just call it 1830, but it's 1832. But so gold's down $20 from where I was yesterday. So here's what I'm going to do. For right now, I'm going to have $20 gold, which is, your pre-1933 gold pieces, an ounce of gold. Back when these were $20 bill to $20 gold piece were interchangeable. And I'll put them down to $20.75. Okay, so that'd be another $25. But here's the catch. So here's where it gets complicated. If gold rallies after Jay Powell comes out and kowtows to Wall Street, I'm going to keep that price. You can buy $20 gold for $2,075 until gold breaks 1845. At 1845, it's going to go back to the $2,100, still on sale, but back to $2,100. If gold breaks 1855, gold's going to be $2,125. You can lock those prices in right now, but I'm going to go a step further. If gold falls after Jay Powell, let's just say if gold falls another $20. That $20.75 price that you locked in right now will make adjustments to all those people and lower the price by that amount. Okay, and we'll do it in $10 increments. So in other words, if gold falls $3 more, we're not going to adjust $3. But just look at it this way: we'll use 1830 as the measuring stick. So if at the end of the day gold goes to 1820, you bought at $20.75, we'll take $10 off a coin to match it. But again, if it goes the other way, then we start taking it away. I know that's really complicated, but it's the only fair way to do it. So you can buy here at a ridiculous, because $20.75 is ridiculous. My gut tells me that gold is only going higher. But I've thought that before and got burned. So now, in case I'm wrong, you get to buy risk-free today, Jason.
Yeah, no, I think I could translate in a simpler form for what you just said. You did a good pitch. Buying gold today, waiting is your worst option. That's just what I heard. Waiting is your worst option. You can buy gold all during the day today, but waiting is your worst option, because you buy it right now and it goes down, we're going to give it to you. So it's like no risk depending on what gold does today during the Fed meeting. But if you wait till later and it goes up, you got to pay a little more because it's just going to cost us more. So right now, if you're going to buy gold, waiting is your worst option.
Yeah, there you go. I thank you. That's exactly what I'm saying. There's no reason to wait. I took all the risk away from waiting. And again, I actually think it's going to go the other way. So if you buy it right now, and I'm wrong, let's say gold falls another $30. Great, you got it for $30 more less. We'll make all those adjustments. 800-951-0592. And put it away. Listen, I got more news, and I hate to keep focusing on energy, but it is going to be something so important. I told you about the inventory reports today. They really weren't great. They weren't horrible. They were draws out of Cushing again, but overall, the draw in the crude market oil was 1 million barrels or so. So nothing horrible. But here's the problem. The Energy Department announced that they loaned out 13.4 more million barrels of oil from the strategic oil reserves. That is an all-time record high of lending of stock. So if you think about, hey, if the Biden administration didn't let them borrow 13 million barrels of oil, we would have had oil inventories down 14 million barrels. I mean, that would have been, forget it, that would have been devastating. But here's the problem now, is the Biden administration in November agreed to lend 50 million barrels. After what they did this week, they've already lent out over 40 million of the 50 million barrels, and crude oil is now higher, Jason, than when they announced the program to begin with. And so if they don't extend this thing, all of a sudden inventory reports are going to get really ugly.
Yeah, energy affects every single thing we do, everything we do. So it's massively important what's going on with how much energy you have, how much you have in storage. And just for a moment to go back to that Turkey thing, Joe, Turkey's not getting their natural gas, their large natural gas shipments that were just canceled from Iran.
And you want to know why? Because Iran needed it.
Correct. And then, so one of the massively large companies that's in Turkey, believe it or not, Joe, is a packaging company. They make packaging. Kind of like El Dorado Water can't keep me my water because they don't have any packaging. You know, that's going to affect companies all over the world that can't package their stuff, Joe. I mean, energy is huge, man. They're gonna shut off the electricity for 4 days. That ain't gonna mess up the supply lines, is it, Joe?
800-951-0592. The dumbest special I've ever run. Take advantage of it. We'll be back for the final segment. Eight 800-951-0592. I feel like my phone is broken. We still got 3 lines open. This is by far, lead pipe, stone cold. This isn't the lead pipe, stone cold lock of the week, lock of the month. This is the lock of the year. $20 gold pieces, $20.75. And again, all predicated on what the spot price does. So yesterday afternoon, gold hit $18.53. And, of course, the wholesaler, bam, here's your new prices. This morning, they sent a price sheet. I didn't even open it until right now because, well, I got busy. Gold was $10 lower. So it wasn't at the lows, but yet it was at, $18.43. And the prices actually had gone up. So this is just me giving away margin here. But take the time, put it away. If after Jay Powell talks, gold rallies, we're raising prices. Here's the good part for everybody else, though. If gold falls farther, we'll lower the prices that you already locked in at. Something we don't do here. But this is one of those situations where either way, you need to add to your portfolio today. Today's the day to do it. This thing is going to come unglued really, really quick. And I'll say this, if for some stupid reason this Ukraine thing blows up by this weekend, where now the embassy is saying everyone get out by all means necessary, it's going to be a really interesting market come Monday. That's if it waits till this weekend.
Yeah, Joe. Yeah, we'll see what happens. I think nothing will happen. In the end, I don't think anybody wants an actual war there. But like I said, if the powers that be need an emergency, they'll take something that maybe isn't an emergency, make it look like an emergency. Who knows, Joe? But it really should not be American troops going there. There shouldn't be Americans being evacuated from there.
Well, think about this, right? If there's this emergency, it gives Jay Powell a reason, to not raise rates.
There is that, and that makes the markets happy, doesn't it?
Even though, listen, I keep looking. Why don't they just get it over with and just change the Fed's parameters from stable currency and full employment, and just add protector of Wall Street to it.
Yeah, no, I agree, Joe.
You know,
wow.
Just get it over with.
Yep. Yeah.
Because obviously, if they cared about the average person on the street right now, rates would already be 5%, 6%, 7%. And here they are, and we're getting ready for tough talk about, hey, we may raise rates by 1/4 point in March.
Yeah, you got to cut the arm off, Joe. You can't just cut a little slice, right?
You got to, yeah, thanks for being that graphic. But you're right. I mean, that's really kind of the choice right now. Jay Powell, are you going to cut your own arm off so the majority of Americans can live? I think the answer is no. I think he's going to make this incredibly painful. I think we're going to see another big wipeout of anywhere from 10 to 20 million people falling out of the middle class again. And again, but don't worry, there'll be a few more billionaires when it's all said and done. 800-951-0592, Patriot Radio News Hour. We'll be back tomorrow. Jason and I are coming right back with the half-empty cup.